Hi viewers! Welcome to our Remarkable Finance channel. Please like, share, subscribe, and click the notification bell to get updated with our new videos. Today's video is how banks make money, which is related to our previous video, why not to save money in the bank. Generally, bank deposits earn very little interest. That's why savings deposits do not earn much interest income. Bank depositors do not benefit much from simple savings accounts. On the other hand, bank borrowers are charged higher interest rates, which are the primary source of banks' revenues. It is therefore advised to avoid bank loans for personal purposes, as it may cause a serious financial trouble that's hard to overcome for an individual and may affect him for the rest of his life. There are different types of banking institutions. Each of these types of banking institutions has specific policies which are suitable for every individual or business depending upon the purpose or intent in banking. Number 1. Credit union. Non-profit businesses charge interest to cover expenses, not for giving large profits to shareholders. It is owned by members to give best option for them to save money or avail of loans at minimal interest rates. Number 2. Commercial bank. Earning interest from loans such as mortgages, car loans, business loans, personal loans, safe deposit boxes, or brokerage accounts. Number 3. Investment banking with corporate transactions and wealth management, governments, or high net worth individuals. Goldman Sachs and Morgan Stanley are largest institutions that deal with investment banking. Number 4. Savings and loan associations. Accept savings deposits, make mortgages, and other loans. Number 5. Central bank. Given privilege to control over the population and distribution of money and credit for a specific country. The U.S. Federal Reserve is one of the most powerful central banks in the world. Other notable central banks are the Bank of England, Bank of Japan, the Swiss National Bank, the Bank of Canada, and many more. Number 6. Retail banking. Provides financial services to individual consumers rather than businesses. Number 7. Savings bank. Accepts savings deposit then pay interest or dividends to savers. Number 8. Cooperative banking. Organized, owned, and controlled by cooperative organizations for providing financial and credit services to cooperative members. Number 9. Online banking. Doing bank transactions through the internet using smartphones, tablet, or computer. Usually, it is free when doing financial transactions with the same bank but charges a fee when accessing another bank. Number 10. Private banking. Financial services offered to a bank's richest customers. Types of banking services. Number 1. Business banking. Business loans, checking accounts, savings account, debit and credit cards, merchant services, treasury services, or payroll services. A company's payroll system linked with a specific bank makes it easy to deliver paychecks to all employees. A very old system was putting the cash inside an envelope and was given individually to the employees on payday. This was a very tedious task, especially if there were hundreds of workers. Nowadays, employees are required to open an account with a specified depository bank for an electronic transfer of salary in each amount every payday. Thousands of employees in a company are paid simultaneously through this system. Number 2. Individual banking. Checking accounts, savings accounts, debit and credit cards, wealth management, insurance. The use of a checking account is particularly beneficial for individuals with business transactions. It is a deposit account wherein deposits and withdrawals can be done using the checkbook. A checking account and a debit card are similar in the sense that there must be a fund or deposit in the account. To issue a check when the deposit account has a zero balance is a big financial trouble. Number 3. Digital banking. Online mobile banking, mobile check deposit, text alerts, electronic statements, online bill pay. With the advent of cellular smartphones, mobile banking has become very popular and made people's life easier carrying out online financial transactions. Every bank transaction is linked with a mobile phone that a text alert is received, especially for withdrawals from the account to warn depositors for unauthorized transactions. Number 4. Loans. Personal loans, car loans, home loans, business loans. Personal, car, and home loans are considered to be dead assets if they would not be used for business. Loans which will generate income in the long run will be an asset when the revenues start to come in the business. While all loans for personal benefits will not give an income and should not be availed of unless the expenditures will be financed by another income-generating asset. With the above facts and data regarding banks, here is how banks make money. Number 1. Interest rate. Banks are considered lenders. They generally make money by borrowing the cash from the depositors and lend money to borrowers at a high interest rate. This is the primary revenue of banks. Number 2. Capital market related income. Banks deal with capital market services for corporations and investors. Services are provided in exchange for the fees paid by the clients. Number 3. Fee-based income. Credit card fees, checking account fees, savings account fees, overdraft or return item fees, monthly account fees, interchange fees or swipe fees, loan fees, non-bank ATM withdrawal fees, international debit card transaction fees, etc. Those are the summarized way that banks make money. The rate of income is dependent upon the type of transaction and the amount involved. As additional information, here are some trivial facts about banks. Letter A. There are 44,000 banks and credit unions around the world. The top 4 banks are China banks, followed by the other banks in the US, Japan, and Canada. Number 1. Industrial and Commercial Bank of China Limited. Number 2. China Construction Bank Corporation. Number 3. Agricultural Bank of China Limited. Number 4. Bank of China Limited. While in number 10, Bank of America National Association. In number 11, Japan Post Bank. In number 19, CITIBANk. While in number 26, Royal Bank of Canada. The largest banks in the world are A. Bank of America, B. JP Morgan Chase, C. Bank of China, letter D. HSBC. The Bank of Venice, formed in 1157, was the first bank in the world. That's all for our video today, guys. Knowing the different types of banking institutions and their respective banking services offered we can select with which bank to open an account that would give maximum benefits to us. Is it best to do banking transactions with China banks as those are the top 4 banks in the world? We'll leave it up to you guys to think it over. We will see you next time on Remarkable Finance. We upload videos every other day. Please do not forget to like, share, and subscribe. Share with us your thoughts about banking events in the comments below. We will be glad to read and reply to your comments. Check out other videos from our Remarkable Finance channel. Thank you for watching. Au revoir.